I want to welcome you all back for another GBAR conversation, and we are lucky here to have Patricia Balmer, who is the Greater Boston Real Estate Board Government Affairs Director. It's absolutely incredible that we have her here today to discuss something that you've all heard about. And the thing you heard about was that transfer tax, but really is not a transfer tax. It's actually known as a sales tax. Trish, and I'm going to call her Trish because that's how I know her as. Trish, you know, we've been hearing a lot about this new sales tax on real estate. Can you give us a sense where the issue stands before the state legislator?
Melvin, thank you for the opportunity to be here with you and with all the members today. I'm delighted to have the opportunity to talk to you about this issue. As you said, we've been hearing a lot more about this new proposed sales tax on real estate. And the reason why we've been hearing a little bit more about it is because there are more communities that are requesting this local authority up at the State House. So we have a handful of communities, half a dozen or so, that have requested what they call at the State House a home rule petition, which is essentially trying to grant local communities additional taxing authority from what they have now. In addition to that, there is a piece of legislation up there that would allow any community the ability to adopt this sales tax on real estate by a vote of their local governing body. So that would be their Board of Selectmen, their City Council. So there's multiple proposals that are pending up there. But we've heard a little bit more about it because some of those proposals have gained some momentum recently. They were recently, a handful of them were reported out of basically the Committee on Taxation, and it's now called the Committee on Revenue, but they gained a favorable report, which means that some of them had made it out of sort of the first hoop in the legislative process and seem to be gaining a little bit of traction up at the State House.
So you're saying a little bit of traction. What do you mean by a little bit of traction?
So that's where they stand at this point in the legislative process. They've gotten a favorable report out of committee. The legislature operates on a 2-year legislative cycle. So between now and July 31st at midnight is when the legislature adjourns, and so that is when time expires. So the legislature typically does not, they will continue to meet for the next 6 months after July 31st, but typically anything complex or controversial that requires a roll call vote will not be taken up after time expires on July 31st. So they have a lot on their plate between now and July 31st. They have, in addition to the 8,000 bills that are pending up at the State House now, they have a lot of really big picture issues that they need to tackle, including the Commonwealth's operating budget. They've talked about sports gambling, mental health. There's a lot of big picture issues that they have to sort of muddle their way through between now and July 31st.
So this is just one other thing they have to look at.
It is one of the things that they have to look at. In addition, certainly maybe some of our members may be more familiar with a recent proposal by the City of Boston. The City of Boston has introduced a sales tax on real estate. This is the third time that they've proposed it. Mm-hmm. The first time that they talked about a proposed sales tax on real estate, the tax rate was set at 6%. The current proposal is smaller than that. But it was recently adopted by the Boston City Council, and it was sent up to the State House as a late file piece of legislation. So that bill will need to go through the regular course of business. It'll be scheduled for a public hearing. And again, that would need to be taken up between now and July 31st, even though it is a late file bill.
What's the difference from this tax, which they try to call as a transfer tax, than like the deed excise tax that's already there?
So some of our members may be familiar that when real estate isn't transacted, there is a fee that needs to be paid to record. It's called a recording fee or an excise fee that is paid by the Registry of Deeds. And that has been in place for quite some time. That is probably the thing that our members are the most familiar with. That's a recording fee. This would be separate from that.
What's that number that they're...
Each proposal is different. It's, each community is seeking a different amount of that tax. So some proposals vary. Some are payable by the buyer, some are payable by the seller. In this particular case, a lot of the proposals that are up at the State House, they have said that they want to earmark that money for affordable housing. But in the past, we've seen these proposals that are pretty broad in terms of allowing authority. Previous sessions, we've seen a new sales tax on real estate to just go to the general fund. In this particular case, most of the transfer tax proposals that are up at the State House seem to be geared towards affordable housing.
So the question I have for you then, if it's geared towards affordable housing, how would that help?
So the important thing to remember, and we'll just do a little bit of legislative history because I think it's important to recall this. In the early 90s, there was a move afoot by municipalities to impose a new sales tax on real estate to pay for affordable housing.
Mm-hmm.
And the compromise that the legislature created was to create the Community Preservation Act. And the Community Preservation Act is a local option tax that any community in Massachusetts can opt into this tax. It's a property tax surcharge. The entire community has to vote to approve it. But once that property tax surcharge is imposed, communities can impose up to 3% on the property tax of everybody who lives in that community. Everybody in that community gets to vote on that tax, and everybody gets to pay that tax. So the Community Preservation Act is one of the ways that we as realtors support the production of affordable housing. And I think it's important for members to understand that it's not necessarily that we oppose affordable housing. We just oppose the mechanism to pay for it.
Oh, everybody can go up to 3%?
Every community in Massachusetts has the existing taxing authority through the community preservation to tax property up to 3%. Not every community, including the city of Boston, has leveraged that tax.
Can you tell me who actually put or signed the bill or?
So we were actually instrumental it was many years ago, as I mentioned, back in the 90s. David Waluka, who you may know,
yes,
former chairman of the Greater Boston Real Estate Board, was instrumental in that effort. He and Fred Meyer and Ed Shanahan were all involved. There were a number of people. David could probably tell you the story better than I could about how that law was originated. But it was a compromise. All the parties came together, and the compromise was made to do the Community Preservation Act versus a transfer tax. And one of the reasons why we as an organization do not support a transfer tax and that the legislature has rejected it is because they've studied it. And there's a good reason why real estate transfer taxes were never considered, or the alternative of the CPA was considered. The CPA was considered as an alternative to the transfer tax because it's not a stable source of revenue. So as we all know, the real estate market is very volatile. It sort of goes up and down. So that's another reason why the legislature rejected the transfer tax as a mechanism to pay for affordable housing. The other sort of problem with a real estate sales tax is that it's regressive. It is discriminatory. It singles out a single segment of that town to pay for a community-wide benefit. And one of the things that we have always said is that if a community has identified a community-wide benefit, be it sewer infrastructure, affordable housing, whatever the community benefit is that community has decided, then the entire community should have to pay for that. The other sort of thing that the legislature has looked at is the fact that in addition to it being an unstable source of revenue, it's regressive, it's discriminatory. Say, for example, you're a senior citizen and you have put a lot of equity into your home, you're getting ready to retire, but you're not quite ready to move out of your community yet, right? You want to move and you want to live in the same community as your grandkids. You still want to stay in that community. You're selling that home so that you can move within that community.
Right.
If you are someone who lives in that community, you might have to pay that tax twice, because anybody who moves within that community but doesn't derive additional benefits is still going to have to be paying that tax. You know, or think of somebody who needs that money to go into assisted living. You know, they've worked hard their whole life, they've invested in their home, they can't quite, get by themselves anymore, and they need that for assisted living or some other reason, for whatever means. Sometimes people, as you know, Melvin, you probably have clients that they may sell home for any number of reasons.
Right.
Job loss, relocation. Maybe you want to use the equity in that home to pay for your kids' education. But I think it's important for people to remember that this isn't stocks and bonds, that we need to tax, or any other tax that we can just impose in order to raise revenue. This is the biggest investment that people have made in their lives. And there's a lot of reason why people use the equity in their home. And we shouldn't penalize them for that. If they've worked hard and they have gotten to the point where their home is appreciated in value, they shouldn't be penalized for that.
I have one other question. Then the buyer who's actually buying the place, and if it's a multi-unit, and the buyer pays more money, and now they have to offset their cost because the seller is trying to recoup the money they may pay in taxes, so they increase the price. I'm saying this slowly just so that people can understand what I'm trying to say, is that could that cost be passed down and the tenant or the new buyer could actually pay more money because of that?
Yeah, well, I mean, municipalities can obviously, like, they could draft it, right, however they want it. It's buyer, seller, who pays the tax, but you folks know everything's negotiable, right? So, if you get into a situation where somebody desperately needs to, sell their home, they need to get out, and they have a good buyer, they may want to absorb that just because they need to be free of it, right? Because of those life circumstances that we've talked about. So at the end of the day, the simple thing is it's bad tax policy. It is bad tax policy, and, one of the other challenges is, once you sort of open Pandora's box and allow one community to do it, every community will be seeking this authority.
So if you invest in a community, and let's say you're a REIT, and you decide to invest in that community, could you be affected by this?
Of course, yeah. In the city of Boston, specifically, that tax also is upon sale and transfer. So if you have a transfer of controlling interest, and you have a change in your partnership, that tax could potentially be caught up, specifically in the city of Boston's proposal.
Oh, okay. That's interesting. Thank you for giving that little information, because some people don't realize that could happen.
It's a big piece of it, and it's there's a lot of ambiguity in the city of Boston proposal specifically. It gives broad authority. They would the legislature would grant the Boston City Council some authority, and then the Boston City Council would be granted sort of wide leverage in order to determine the details of the tax in that case. In terms of our position, I think we've touched on some of the talking points, and part of the reason we have opposed it as an organization is because the idea has been studied. It's been studied extensively in terms of the volatility, the fact that it creates a gated community, the fact that it is regressive, the fact that it discriminates against a single segment of the population to pay for a community-wide benefit, the fact that people who move within the community don't derive additional benefit, although they would absorb the cost of the tax. Think about people who are in a short sale or foreclosure. That would hurt those people who are doing all that they can to just try to get out from underneath that short sale and foreclosure. So both the Greater Boston Real Estate Board and the Mass Association of Realtors have opposed real estate transfer taxes for some time, and that decision is made through a committee of your peers, and it is, in the case of MAR, it is approved by the MAR Board of Directors. It is a long-standing, long-held position that the association has held, and for good reason, for merit. And to remind everybody, it's not that we oppose mechanisms or tax mechanisms to pay for affordable housing. We do, and we actually support affordable housing in a lot of other ways. We were a big proponent of Chapter 40B. We opposed any effort to repeal the comprehensive permit law. Governor Baker just recently signed the Housing Choice Law, which is going to give communities more flexibility in zoning. So we are proactive in some ways in trying to encourage the production of affordable housing, and we support the Community Preservation Act as a mechanism to pay for affordable housing. But we feel that communities are already paying twice for affordable housing. Once through the property tax surcharge in any community that has the Community Preservation Act, twice through the deeds excise tax, which goes into the matching funds for affordable housing. So this, in essence, would be a triple tax. This would be a triple tax to pay for affordable housing. So it's not that we oppose affordable housing. We don't. We have supported it in many different ways, encouraging funding for those programs, but we just disagree on how communities should be taxed to pay for it.
So you're saying we're disagreeing on the mechanism.
That's right. We don't we don't disagree that affordable housing and the production of affordable housing is important, and it's why we support it in a lot of different ways. We just disagree in this particular case on how to pay for it.
I have two more questions, but the one of the CPA, can you tell us a little bit the CPA, there's three pieces of that CPA. Can some people may understand, some people may not, so I just want them to be aware of that as well.
Sure. So in the early 90s, the legislature had considered a way to pay for affordable housing, historic preservation, and open space. Mm-hmm. And a compromise was reached to try to fund all of those three things by the alternative to a real estate transfer tax would be the Community Preservation Act. And so this allows any community that chooses to do so the ability to vote by local referendum of their legislative body, the ability to impose a property tax surcharge up to 3%, and that money can be earmarked in those three buckets that I mentioned: open space, affordable housing, or historic preservation. Mm-hmm. So communities can allocate up to 80% of that money to affordable housing. It's just up to the community on how they want to tax people and how they want to allocate it. So the CPA is funded through a property tax surcharge, and in addition, every time that somebody pays a deeds excise tax, there is a matching fund that goes into a state matching fund, and then the Commonwealth of Massachusetts matches that funding for a local community that has it. So in addition to the property tax surcharge, they get matching funds from the Commonwealth of Massachusetts, which anybody who's ever transacted a house is already paying for.
Wow, so they're getting matching funds.
They do get matching funds. In addition, it's complicated, but the legislature does allocate money for affordable housing in that particular fund in a lot of different ways. And let's not forget the fact that recently the Commonwealth is pretty flush with money. The ARPA money, the federal funding that came from the federal government, the Commonwealth of Massachusetts currently has billions of dollars in ARPA money that they are in the process of trying to allocate. And some of that money has been allocated into local municipalities. Mm-hmm. The legislature is also in the process of doing their budget. And right now, although I think they were very fearful of really getting hammered by the pandemic, they actually have a budget surplus. So it sort of calls into question why this particular tax is needed when they have a lot of not only sustainable sources of revenue like the CPA to pay for affordable housing, but they also have a lot of money that's been made available to them through the federal government, and we've encouraged them to try to allocate some of that money towards affordable housing. Yeah.
But is there anything that we can do as realtors, or anybody? Can anybody?
Absolutely. So the number one thing I will say in June, Realtor Day in Beacon Hill is held by our partner organization, the Massachusetts Association of Realtors, every June. So we would encourage realtors, if they have never had a chance to do so, to take their voice up to Beacon Hill. But even if you can't take the day off, you don't have to take the day off. You don't have to come to Realtor Day in Beacon Hill, although we would love to see you there. Pick up the phone, call your legislator. The State House is now back open. So every legislator, in addition to being at the State House office where you can call and request an appointment to come and meet them, most legislators have office hours. So in your local community, you probably can just Google it or look at your local newspaper, or call your legislator and say, are you having office hours? Can I stop by to just catch up with you? So that's another way to be involved. Certainly if you're too shy about meeting in person, and I haven't met a realtor who has ever been shy, but if you are a little shy or you're a little nervous to do it, certainly you can pick up the phone, call, send an email. On our website, on greb.com, there is a call for action. So it's a pre-populated email that you can just, it's all done for you, so you don't even have to think about it. You just fill out the email and send it on its way. But, we know many of you are locally involved. You're in your community. You know who your legislator is. You see them around the community. Pull them aside and just say, I'd love to chat with you about this new sales tax on real estate. Or, we've been through a terrible time with the pandemic, and we're really concerned about what this could do to the real estate market. Legislators are people too, and they love to hear from constituents. So, just take the opportunity to get out and try to network.
You brought up something, call to action. How does anybody get on the call to action? Do we have like an email system, or do we have a text system? And how do you make sure that you get part of that call to action?
So you should, both MAR, the Mass Association of Realtors, and the Greater Boston Real Estate Board have two separate systems. So I can only speak for us, the Greater Boston Real Estate Board, but if you go to our website and if you log in as a member, you'll be able to see a copy of the call for action, and you can just click and find out. You don't have to actually do anything proactively. You just, you should have received, we had sent the email out a couple times, but if you didn't, we all get a lot of email these days, so if somehow it was lost in your inbox, you can find it on GBAR.com. So, and take, if you want to dig deep on some of these issues, the advocacy section of GBAR.com has a lot of information about these issues and many other issues that are coming before the legislature. And then lastly, I'll mention to you, one of the things that the Greater Boston Real Estate Board has recently launched is something called the Grassroots Alliance. And that is something that you do have to actually opt into.
Okay.
The call for action, you'll get that automatically. But the Grassroots Alliance, it's a brand new program, and it's something that we're excited about. And it allows realtors to opt in if they want to do a little bit more.
Okay.
If they're interested in perhaps maybe writing a letter to the editor, or they want to share something on social media. This just allows you to opt into it. It's pretty simple. You go to the website, it's under GBAR.com and the resources, so you scroll down there and you opt into the Grassroots Alliance, and it's pretty simple. It's 3 or 4 questions, and we're not going to hammer you with emails or ask you to do. It's really sort of a case-by-case basis. Kind of think of it as like volunteer fire department. We're only going to call you if we need you, but it allows us to sort of quickly identify who else might have a special connection with their legislator, who might be willing to do a little extra step. And if you are interested in writing a letter to your local paper, we'll guide you through that process. Once you're opted into this Grassroots Alliance, our team will guide you through that. So it's, you don't have to be nervous that it's something that you have to write on your own. Once you've kind of self-identified and we find that this is something that we'd like you to do, timing is everything, obviously, but you don't have to actually do it. You just have to let us know that you might be willing to do it if we need you.
Trish, and should I say Patricia Baumer, to the rest of you all, I want to say thank you very, very, very much.
I appreciate the opportunity to be here.
Appreciate you. It's been a wonderful time, and it's always been great to work with you. Can't wait to continue working with you.
That's right. We'll see you at Real Today in the Beacon Hill.
Yes, you will. Thank you very much. Appreciate it.
Thank you, Melvin.
Thank you. Have a great day.